Welcome back. Well, BrainBees Solutions, which runs India's largest multi-channel mother and baby product retail platform, FirstCry, has also seen a strong debut. It's listed at a 40% premium to its issue price. We have with us Mr. Supam Maheshwari, who is the Managing Director as well as the CEO of BrainBees. Hi, Supam. Good morning and congratulations. Solid listing. Your shareholders will be pleased to see the kind of listing gains that they're seeing. But now it's all on business, right? So let's focus on that. As you've mentioned in the past, the industry is expected to grow by close to around 20%. What kind of growth can you deliver for the company in the coming fiscal? Point number one. Point number two is on margins, you have been doing close to around 7 to 8% margins. When do you see this number headed to double digits?
So you rightly picked up. If you look at our business, Mangalam, we are operating out of a $120 billion TAM. In India, multi-channel is going to be $66 billion by FY29. Yes, the market is only 16% organized, which is growing at a 20% CAGR. Being the largest multi-channel retail shopping destination for mothers, baby and kids, we should be the largest beneficiary. And if you look at our past record, we have grown at a CAGR of 20% plus in our India multi-channel. And we should continue to demonstrate going forward, given the industry itself is growing at that. So that's how I would put it.
Okay, all right.
And we have all the modes that we have created for that.
Yeah, Supam, so we've got it in terms of growth. You're expecting industry to grow 20-25%, and you will be outgrowing in the industry, to extrapolate what you said. But in margins, I'm just noticing it, you're roughly at around 4.5% margins. By when do you get to around 7 to 8% and then to double digits? Give us timelines.
So look, if you look at our overall, you're referring to console margins, if you look at our journey, we were at 1.5% in FY23. We grew to 4.2% in FY24. So that's a meaningful jump that we have taken in just 12 months. And with our GlobalBees business becoming profitable, India multi-channel growing from 5.9% adjusted EBITDA in FY22 to 8.8% in FY24. That's also a very meaningful jump. And likewise, our international business has been able to improve our profile in terms of the negative EBITDA because just the journey that we have started 2 years back in Saudi. With all of these businesses that we are demonstrating, and our small business on preschool also delivers close to around 18% adjusted EBITDA, close to which was negative in FY23. So with all of these four segments delivering meaningful expansion on bottom line, and we should be able to demonstrate at a console level as well going forward.
All right. Supam, I just wanted to know one thing from you. You have been raising these funds to add your own store network. Now, typically, a large part of your store network is franchised. With your own stores, you will have better margins, right? Could you tell us the differential between margins that you get from the franchise business from your own stores, and how is this mix likely to change, say, 1 to 2 years from now, once all your 350 stores are on stream?
So today we have this ratio of 1,000 plus stores into 60-40. 60% is franchisee owned, franchisee operated. We have been running with almost close to hundreds of franchisees, business partners that have trusted us for so many years and even more than a decade, some of them. So we will continue to build on that while our journey of Coco, which is company owned, company operated, started somewhere close to FY29 when the percentage ratio was less than 10% of our Coco stores in FY21. And in FY24, it has become close to around 40%. So over a period of time, we will, while as per our RHP, if you will read, we are going to open 350 Coco stores in next 2 years, while our journey for FOFO also will continue to grow along as we have done in past. So the ratio will not materially change, but it will keep getting in the similar direction as what we have demonstrated in the last 3 to 4 years.
Okay, all right. Supam, what is the expected investment and growth in the preschool business from here on?
So there is no investment in that business. It's an asset-light business, Mangalam. It is business partners that we work with. We have already 200 plus preschools in the country. This business is started very, post-COVID incidentally, because in the COVID everything was shut. So in last 2.5 years, today we have 200 plus preschools. Last year we grew 50% year on year. If you look at our FY24 or FY23, and from a profitability standpoint, FY23 was negative, and FY24 we have already delivered 17.5% EBITDA in the preschool business. So this will only continue to compound as we grow along, because it's a totally asset-light business. There is no investment per se on any capex or opex incrementally from our side.
All right, one was wondering what the synergies between this and your core business would be out there, but thanks for explaining. Short on time, today was a day for your company shareholders to celebrate with the 40% uptick that we've seen on the issue price. But, we'll speak to you once you report your results for the first half of this year and thereafter get better direction on the numbers of the company. Thank you so much for joining in, Supam. That was the management of BrainBees Solutions, another stock that was a big lister in today's trading session. Take a short break, come back. On the other side, we have the team of Trading Gar taking forward the market action.